Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Electric vehicles continue to be a really hot topic in the market, and companies like Lucid have captured investors' imagination. Can this be the next Tesla-type stock? But there are some real warning signs with Lucid specifically, and I want to get into why this is a company that I'm concerned about for 2023, and I have a lot of questions that they need to answer when earnings are released. My name is Travis Hoium. Thanks for watching Riiv Investing. Please subscribe here on YouTube and share this with anybody you think would be interested. Now, I want to start with the way that I think about these electric vehicle stocks going into 2023. A lot of these companies like Lucid, Rivian are still in their growth phase. So they're building out their manufacturing plants, increasing production, trying to prove that they can make vehicles profitably and deliver to customers. But what they need to do is they need to prove that they can make their unit economics work. That means make a vehicle for less money than it costs to. That means make a vehicle for less money than they can sell it for, generating a profit on each vehicle that they're selling. And they also need to prove that they're going to be able to increase their demand over time. If you're increasing your production from 10,000 vehicles a year to 100,000 vehicles a year, that means now you need to go from having 10,000 customers to 100,000 customers. And if that growth rate keeps growing, the demands on adding customers continues to pile up. This is something that Tesla has faced over the last few months alone, as it's resorted to reducing the prices of its vehicles just to ship the vehicles it's already made. In a previous video that I will link to below, I highlighted that Rivian was actually adding to its reservation base despite the fact that it was actually growing production really quickly. But what is Lucid doing? This is what I want to highlight for investors and what I think is a little concerning. Let's start with a look at third quarter 2022 metrics that they released a few months ago. You can see that deliveries were 1,398 vehicles, production was 2,282, and reservations were over 34,000. You look at that on the surface and you think, well, they're only producing 2,300 vehicles. They have 34,000 reservations. That's a really good position to be in. But compared to a quarter earlier, the numbers are actually deteriorating. Let's go back to second quarter 2022 results. There were reservations of 37,000. Now, remember, there was a little over 1,000 vehicles delivered in the quarter. That means almost 2,000 people dropped off the reservation list, canceled their reservation. You can also see here that potential sales in the second quarter was $3.5 billion. If we go back to this third quarter presentation, now we're down to $3.2 billion. So the number of reservations and the potential revenue from those reservations is falling. The other concerning thing is that demand for luxury vehicles, particularly in the electric vehicle space, has really dropped over the last few months alone. The Air Pure, which I'm looking at right now, starts at $87,400. That's more expensive than most vehicles that Tesla makes. And Tesla dropped its prices by as much as 20% around the world in January. So how does a company like Lucid respond to this? Reservations are dropping. Demand for their vehicles may be falling as well. Are they going to be able to respond by lowering prices to try to increase that demand? We have also seen signs that some of the competitors, not only in the electric vehicle space, but in the internal combustion engine space, have been able to make more vehicles over the last few months than they were during the pandemic. You might remember that a lot of vehicles just simply weren't being made, particularly in the car market, where automakers decided to produce trucks and SUVs, which are much higher margin vehicles, and simply not produce a lot of cars. That could have pushed a lot of demand to companies like Lucid and Tesla, especially when you only had to put down a little bit of money for a deposit. And a lot of times that deposit was refundable. So the thing to watch when third quarter results come out is not necessarily how many vehicles were produced or how many were delivered to customers. I want to see, where are reservations at? Does that reservation number increase from 34,000 plus with potential sales of $3.2 billion? Does that number go up or does it go down? Because if it's going down, that's telling us demand for Lucid's vehicles is falling, and the company may not have enough demand when it reaches the point in its production cycle where it's actually going to be able to start making money. That's the concern for Lucid. That's the concern for Lucid. This is fundamentally a manufacturing company. It lives by the laws of supply and demand, and it needs to have enough demand there when it does have enough to supply to be profitable. I'll be following its earnings in the next few weeks, so check back here when they do release results, and we'll see how they're doing, especially compared to some of the other electric vehicle makers. What are your thoughts on Lucid? Is this a stock you own or are interested in? Leave your comments in the comment section below. Give this video a like. And of course, follow Riiv Investing. Thanks for watching, and I'll see you here next time.